Hey, what's going on, traders? This is Chris at Vertical Trading. It's time for a new video. This video, guys, I was thinking about a few things over the weekend and I just decided to put them together into one video. And some videos I make here are tutorial based content. This video is going to be more related to the trading psychology and the trading business aspect, and how we manage our trading as individual traders, or even if you operate in some kind of a firm or trading environment. I want to kind of give you some context around some of the things that I've been thinking about lately, and probably they're going to be relatable if you've traded for any time at all. And if you haven't traded before, well, it's still going to be interesting to watch some content from people who do trade the markets regularly. Okay, even if we're not $1 million traders, we still put money at risk every day, and that makes us traders. So let's get it. My name is Chris and I operate this channel. Feel free to check out other videos. We've got a ton of other tutorial based videos, and by the way, more tutorial videos coming in the future, guys. And this one's not a tutorial, it's just going to be some overall thoughts and context here. In the background, you've got a video of my screen. Probably it was Friday morning or something. And we are the end of January here in the year 2022. It might be 10 years in the future and you're watching this. So here are the 3 points for this video. The first one is, number one, we put out what we take in. I'm going to develop these ideas here as the video goes on. Number two, humans and arbitrary constructs. Number three, our deliberate thinking brain becomes lazy very easily, and we need to wake it up constantly. Okay, so I think that these 3 points are important for decision makers, and I'm going to explain to you why. They're related to our overall psychology when it comes to making decisions and risk decisions more specifically. So let's talk first about the third point that I mentioned, which was that our deliberate thinking brain becomes very lazy easily. Now, you guys might know that I'm referring to the Daniel Kahneman concept about how our brain has, two parts to it. The first one is like the fight or flight or automatic response brain, and then the second, it would be system 2, which is the part of our brain that's responsible for more deliberate thinking and really high amounts of focus and processing of information, and just some serious brain power right there. And what I want to say here in general is that I found that the more you get used to something, the lazier your deliberate thinking brain power part of your brain gets. So, you might kind of get into a certain habit of doing something to the point where it becomes second nature, and then you get, in a way, swept into whatever that was, whatever habit you got so used to. And I think that this is not a good thing to do when it comes to trading, because of the way the markets operate and the way they change around. For a discretionary trader on a day-to-day basis, or any moment for that matter, they need to be able to sit there and adapt to what's going on. And in order to sit there and adapt to what's going on, I think that you really do need to engage that second part of your brain that's used for more deliberate, fine and focused thinking and analysis, and the part of your brain that is lazy to wake up. Okay, so I'm going to introduce you guys to my friend Brian, and then he's going to read you a little paragraph here. So check it out.
Hard work system 2 brain. Pro performers need to understand how the decisions they are making are interacting with the overall environment on a very deep level. One very common problem we face is because we are creatures of habit by nature and our thinking brains are not always active. In fact, the system 2 would prefer to remain off and only activate if it really needs to. It's lazy.
Thank you, Brian. You guys know what I mean now, okay? You show up every single day and you do exactly the same thing every day. And maybe what you've been doing has been working, or maybe what you've been doing hasn't been working. But either way, you're programming habits every day that you show up and do something. And oftentimes, the habits that you're programming, they might not help you today or the next day, because things are always changing, and as a high level decision maker, you need to use that brain power to really, sit there and see what's going on and adapt your method to what's going on, okay? I'll give you another example about this as we watch an 830 number hit the market and there's going to be some crazy volatility. Let's say you create an indicator that is proprietary to you, meaning that you created this indicator to show you a very specific piece of data, or it combines data in a way that helps you to easily execute your system, okay? And oftentimes it will be some kind of an indicator that does some automatic calculations for you. Now, the issue with these types of indicators, especially if you're already a mostly a discretionary type of trader, is that unless it is programmed with a high amount of detail that it can self-tune itself to whatever the market is doing, then most probably it's just going to be a reference and it's not going to be an end-all be-all solution in regards to how you're going to trade the market, okay? And one example I can give you is if you create an indicator that measures the approximate volatility of your marketplace. Well, unless you've gone into a lot amount of detail and you have the help of expert developers behind you, then the chances are that the indicator that you've created is able to work well most of the time, but in general, it still is a lagging indicator and it still is generally a reference for the volatility, and it's not a true representation of the volatility. Now, I think it would be possible, like I said, with the help of a true expert, where you can create an indicator that is basing itself off of exactly the volatility that's happening right now. So I created an indicator that I used, that I combined a few different indicators to create one, and I've noticed that it is very reliable when it comes to getting a reference for the volatility. But at the end of the day, it's not a perfect solution either, because the volatility changes, and in my scenario, because I'm still a discretionary manual trader, I need to understand that what takes precedence is what the market is actually doing, right? So for example, the volatility could be predicting 8 ticks, but the market's only moving 6. And if I'm not accounting for that, then I will not be capturing the opportunities that are relevant to the action happening right now. So basically, I would need to activate my system 2 to override the indicator and basically understand that the indicator is only there to serve as a reference if it has already been confirmed that that is the proper reference, or that has been, the benchmark for the most recent volatility, for example. But at the end of the day, what the market is actually doing in terms of its price action and volatility and volume, that takes precedence over the indicator that I've programmed. Okay guys, before we get to the next part, I just want to remind you guys to hit the like button if you made it this far, and remember to subscribe to the YouTube channel and check out other videos on the channel. We're going to talk about 2 more things in this video. The first one is going to be talking about humans and arbitrary constructs. And I don't know if I'm qualified enough to talk about this, but I'm going to give you my overall thoughts on it, having, been self-employed for something like maybe 9 years at this point. Originally, I was doing music full-time for a solid 7 years. And then ever since I started this YouTube channel, I've been basically doing this full-time along with my trading on the side. So I want to talk to you guys about arbitrary constructs. There's many constructs around us in this world. You can call them programs or constructs, or a box that we're in. So I'll let Brian tell you what I wrote here.
I believe the 7-day work week is an arbitrary construct which our bodies are not designed to follow. By always forcing ourselves to abide by the construct, we can exhaust ourselves from what our body actually requires at that time.
All right, guys, so I'm sure there are many logical reasons for the fact that we have a 5-day work week and 2-day weekend. But one thing that I could say is that I don't think humans are really designed to follow very strict regimens like this. And maybe I don't have the facts to back this, but it's basically something that I feel. And, being self-employed and working on your own sort of schedule, I think that we are really meant to do what our body is telling us in that moment. And I also think that if you constantly force yourself to abide by the construct, like show up every day and just force yourself to do what has to be done, you're going to reach a point where you break yourself, where you're just too exhausted and you're no longer in an optimal state to make good decisions. This is where the line sort of is, I think, the line in the sand in regards to, how many days do you show up to trade? Well, in reality, I think, and many other traders would agree, that you need to show up for pretty much every single day that the market is open. But you also need to be aware that there is a large percentage of days of the year where the price action will not be ideal for the kind of trading that you do. And the second thing is, now the opposite to this is that, of course, if you do force yourself to show up every single day without accounting for any other things, you're going to reach a point where you are simply burnt out. You're going to have days where you show up and you're exhausted and you have no idea what's going on, and basically you're just playing on pure hope, and you're basically gambling. I've had days where I wake up in the morning and I know I'm half asleep and I click my mouse anyways because I've programmed myself to do it. And my habit brain took over and just allowed me to click the mouse, right? Because I've programmed the habit of clicking the mouse all the time. But I wasn't awake enough to activate my deliberate brain to say, well, wait a second, I'm actually pretty damn exhausted here. And I know that if I do click this mouse, I might not be clicking it for the right reasons because I'm still half asleep or for whatever other reason here. So, in short, what I want to get across here is that you should not feel bad if some days you show up and you're totally exhausted and you have absolutely no clue what is going on. Because as a human, you are, a pretty complex being. You have emotions, you have muscles, you have a body and a mind and all this stuff. And like I said, I'm not here to, preach about any of this stuff, but I want to just inform you guys that, you're not perfect and you're going to have days where you're totally off your game. And if you're not really going to admit to yourself that you're not in a good state to make decisions, then that's going to contribute to a worse result at the end of the month. And what I want to make you aware of now, kind of tying into the next part of this, is that a lot of times there's more context involved with our decisions than we think there is, right? So, you can look at a trade or many trades in sequence and you can see certain things. You can see the mistakes that you're making clearly. And in hindsight, a lot of times these mistakes look very obvious. Like, oh, I know that every time I take a breakout and if it doesn't work by, a certain amount of time, or if I was expecting to see something and it didn't happen, I already know that I need to be exiting that trade. I already know, right? But you knew, but you didn't do it. Why not, right? So there's a deeper rabbit hole than most of you think here, guys. And that's what I'm trying to, make you aware of. You should never degrade trading psychology. We're not trying to overthink things here. We're trying to understand context around ourselves as decision makers and our spectrum of level of skill and how outside things can affect our decision making process. Okay? So there's really a big context here. So I recently picked this book up again, started reading it. I recommend this book to anybody who wants to learn more about how your brain operates under a variety of circumstances. So this is the book Thinking Fast and Slow by Daniel Kahneman, and definitely would recommend it on your free time to just open it up and read a few pages of that. So now that we're talking about context, I'll let Brian read you another paragraph here.
Context around our decisions and reviewing past decisions. Sometimes it can feel like everything is going wrong and can never seem to end. Sometimes it can feel like everything is going right and can never seem to end. The thing is, these statements are made by just generally understanding a sequence of results on the surface. We have not really gone into the context of other things around these decisions and what contributed to the decisions and the outcomes.
So what I had Brian describe to you there is how oftentimes we are unable to truly dig deep enough to really see all of the pieces of the puzzle related to our decision-making process and our state that we're in when we're making decisions. What's tricky here is to avoid hindsight analysis. And that's why, a lot of times you might have a bad trade and the only explanation is that you had a bad trade. I think that is a mature place to be in your trading when you're able to say, well, I did everything right on the trade, and that was just simply a bad trade. It just went wrong. What I was expecting did not happen, and that's just how it ended. That particular decision, maybe it just landed somewhere on the back end of your skill level, and that's totally fine. It happens. And you can't judge yourself based on only that decision. Now, if you do notice a pattern starting to arise, like I had Brian describe to you something like a losing streak when you have, many trades in a row and it just feels like everything just can't go right, everything just seems to be continuing to go wrong, your account balance is going the wrong way, well, then is when you can start looking at some outside things. And this is going to help tie us into the next part of the video here, which is the last point, which is I just wanted to explain one thing that I believe, which is this. We put out what we take in as human beings.
We live out the thoughts and words of what we are exposed to. We are like sponges and we tend to spit out what we take in. This can be good or bad. Isolation is also not very good for a developing environment. We need colleagues to bounce ideas off of. They need to be the right colleagues. We become our surroundings.
So I think it's safe to say that if you are exposing yourself to an environment that is clashing with your current goals and things that you want to do in your life, then you are not working towards your goals. You're working away from them. And it does sound simple when I put it in that way, but I want you to take this seriously. I need to take this more seriously. I believe this, guys. I believe that every experience you have in life, every conversation you have, every word that you listen to, every sound that you hear that enters your being, it is entering your being. Okay. And even if you say, oh no, I wasn't listening, or I wasn't paying attention, or I don't want to hear that, it's not really what I want to hear. Even if you say that, it's still entered your being, right? It's still, you still experienced it one way or another. And when you experience something, well, it becomes a part of you because you experienced it. And the way I guess we work as humans, and again, guys, maybe I'm not qualified to say this because I'm just sort of, speaking on something that I feel intuitive about, that I think is relevant, and it's just something that I'm thinking about. I think that we tend to put out what we feel, what we think, what we are. We put out what we are, and if we are what we experience, then we're like kind of like a sponge, right? So we take in things and then we spit them out. And that's sort of how I imagine things. So all this to say, guys, if you're not surrounding yourself with other people who have, goals that are in similar, alignment to you, or it could be interests, then, you're not really going to be aligning yourself with those goals more. You're going to be moving further away from them. Okay. And a lot of times this can be a very tricky thing, right? Because you might have certain relationships in your life that are, founded from long ago, and they're based on, comfort at this point. There's a comfort level in your relationship, but deep down that there are other aspects of these relationships that are potentially harming your overall goals and aspirations going forward. Because remember, we are like these sponges. And for example, you want to be a better decision maker. The only way to become a better decision maker is to talk with other people who also want to become better decision makers. And that way you can discuss, strategies and means that you are going about becoming better decision makers. So all this to say is that you need to be very, cautious about where you choose to place your time and energy. Make sure that you're putting your energy in places that are likely to give you a return in that regard. And definitely, in regards to trading, you want to be talking with other traders who have similar goals, similar style of trading, and a similar understanding of the overall context of, themselves as decision makers and the overall market in which they're operating in. So guys, that is what I wanted to cover in this video, and I hope it was insightful to some degree. You guys know that I like making videos talking about this stuff. It helps me to solidify my own ideas and my own psychology regarding my trading. And I just like to post this stuff because I just like to, and also it helps the YouTube stuff too. So guys, if it helped you, let me know. And I just want to leave you guys with one last quote from Brian, and here we go.
This market is filled with pimps and hustlers, but it is also filled with wimps, busters and trade evaluation pumpers. Watch your skins out there, boys, and remember, never, and I mean never, trust a Lambo boy who uses MetaTrader 5.
Take care, guys.